So for chapters 7 and 8, I decided rather than work a problem, I wanted to talk to you about your homework and give you some hints and help you get started on this and kind of show you in the book where to look for the information that you need to complete this. And I'm probably going to have to start and stop quite a bit because I'm flipping pages and trying to help you find where to go in the book. So you're going to want to pause and rewind and make notes as you go along. So in this one we have an internal service fund, and it's a central garage fund, and they give you the pre-closing trial balance for the current fiscal year. So make sure you know what you're looking at. Pre-closing trial balance for the current fiscal year. So it's the end of the year. This is your trial balance and you haven't done any closing entries. So it asks you, well, it gives you this information, and then it asks you to prepare journal entries to record the transactions for the period in the central garage fund accounts and in the governmental activities accounts. And so starting off, you're going to want to refer back to the examples given to you on pages 263 forward. This first one, supplies were purchased on account for $92,000. The perpetual inventory method is used. And so for that one, for example, you're showing an increase in your inventory, and you're showing vouchers payable in your internal service fund and governmental activities right down here. That's really all there is to that one. And then in number 2, it says the cost of supplies used during the year was $110,000. A physical count taken as of that date showed materials and supplies on hand totaled $72,000. So you're going to have to do a T count to figure out what you need to do there, but you'll want to follow the example you see on page 266 on the cost of supplies issued and the inventory of supplies for your internal service fund. And then the same thing for your governmental activities, except that one's going to be an expense. In number 3, and you can see we're kind of following along here. In number 3, salaries and wages paid to the employees total $235,000. So in your internal service fund, that's going to be an expense similar to what you see on page 266, and in your governmental activities also going to be an expense of the general government. Then in number 4, you have billings totaling $30,000, which were received from the enterprise fund for utilities. The central garage fund paid $27,000 of the amount owed. And so you have an expense in your internal service fund, you have an expense of $30,000, cash going out of $27,000, and then a due to for the other 3. In your governmental activities, you have a very similar entry. And an example of that might be found on, you've got an internal balance, and I'm trying to find one. You can see the internal balances and how those work on page 267. And then in number 5, you have depreciation expense, and that also has an allowance for depreciation. And so for your internal service fund, you're going to show that depreciation expense for each one of those assets. And then for your governmental, you simply show an expense, and you can see this on page 268 is where you'll see an example of that. And then billings to other departments for services provided to them is given to you, and you can see those it's due from other funds is going to be your debit, and your credit is billings to other departments. Don't see an example of that, but I gave you the, oh, there it is, page 266 is an example of that. And then number 7, unpaid interfund receivable balances were as follows. And so you're given the beginning of the year and the end of the year. let's see, 9,000 and 12,000. And so the other number that you're going to use for that is this 397,000 up here. And you'll set up a T account and show a collection of cash and a decrease, I'm sorry, an increase in due from other funds. And so that's the way that one is set up. And then finally on number 8, closing entries. And so for your closing entries, you will, I'm sorry, vouchers payable first. Your vouchers payable at the end of the year, you're going to have to do a T account. You've got your beginning balance. Well, and I say beginning balance, your pre-closing trial balance of 31,000, and then you have 92,000 of supplies purchased up here, and then you have an ending balance of 16, so that means you pay vouchers payable for the difference. So set that up as a beginning, ending, and an adjustment. And then finally, your closing entries, you close out your billings to departments, which is kind of like revenue. Close out your expenses like cost of supplies issued, salary and wages, and depreciation. And then you have an excess of net billings over cost. And examples of this are on page 268. Okay, so once you get through all of that, you're going to have a pretty good feel, I think, for what's going on. And from there, you're going to want to do your statement of revenues, expenses, and changes in fund net position. And these will come from all of this information you're given up here. I would do T accounts so that you can keep up with that as you go along. And then it will be real simple to do that statement. And then you'll also do a statement of net position. And so it's really not that, it seems like a long problem, but it really isn't. If you will document this as you go along and do those T accounts as you move along through there. Okay, this is where you do your statement. This is your statement of net position. And then this one, you should be able to get that pretty easily. In the next one, you're going to do a statement of cash flows. And this is actually problem number 21 at the back of the book. And an example of a statement of cash flows. An example of a statement of cash flows is on page 289. And it says you can ignore the reconciliation. So we've already got it set up down here for you, cash pay to. I would, if it were me, I would go through this and I would do a T count for cash, or general journal, whatever works for you, or general ledger, sorry. And I would go ahead and figure out how each of these impact cash. Then I would jump down here, because that way you're going to have a better idea of what your ending is going to be. And I can tell you that the ending should be 1,125,435. And that should help you as you go through that problem. And then the last one you have for chapter 7 is number 22. And you are again asked to do a statement of revenue, expenses, changes in fund balances, and so forth. And so you're going to have your operating income. Now, again, you've been given pre-closing trial balance. So this is similar to what we did in the first one, except you're not doing the journal entries. And so again, what I would do is set up T accounts so that you have a place to calculate all of this information before you start trying to put it in. Let's see. Your charges for services, $2,040,000. Is correct. And then you've got all of your expenses, your personnel expenses. These are all also correct and ready to go. And that will give you operating income. And then make sure you're showing your non-operating revenue and expenses separately. And think that's really all you need right there to do your statement of revenue, expenses, and changes in fund net position. So your ending net position is $1,424,940. And then you're going to jump over to your statement of net position, and you're given your current assets. It's all given to you up here. You're given your capital assets. That's all available for you. You're given your current liabilities, and it's all already separated out for you. So you're basically just putting this into good form, and your total net position, make sure I'm giving you a good number. Your total net position should be $1,424,940. And then the last thing you're asked to do is a statement of cash flows. Again, everything's given to you. So you have your cash received from customers. Now you're going to need some of this information down here to help you calculate that. And what I would recommend is, again, don't try to jump in and do this on your computer. Make sure you jot some of this down before you start working on it. This information you're given down here is really what you're going to need, a lot of this for the statement of cash flows. And so if you have questions on that, you can let me know. You've got your cash received from customers. I'm trying to give you a hint without giving you the answer. Oh, and the answer is right there. It gives you the answer. See, you don't even have to calculate that. You've got your cash payments for all of your expenses. You've got your proceeds from, you had a sale. Where is it? You had a proceed from sales of capital assets right here, $92.50. You had some principal that you paid on capital debt, and you had some interest you paid on capital debt. Here's your interest. And so you should be able to figure that one out pretty easily. And then you had some interest received, some cash coming in. And so your ending cash, your ending cash is this $182,240 plus this $942, or $1,124,240. You're given your beginning cash of $99.30. And so you should be able to very easily calculate your statement of cash flows. Just one more hint. This right here where it tells you cash received for interest and dividends of this was 75 was restricted. So if you take that 75 away from this 942, you'll have your beginning restricted cash. And you'll need that for your cash flow statement. So that's your hints for Chapter 7 homework and a little bit of education as we talked about it.